prefer, for equities, the developed or the developing markets? Most private banking players are currently talking up the prospects of Europe, the US and Japan, but are perhaps not as keen on the developing markets as they once were. And we heard Morgan Stanley dub them the Fragile Five: Indonesia, South Africa, Brazil, Turkey and India. Are you increasingly wary of those developing markets and concentrating on the big three developed markets?
This is totally right. I mean, we hear a lot of people now realizing that the growth in some emerging market is going to be weak in the next quarters. That's also what we expect, actually. And to give you some figures, for next year, the growth in Brazil will be 2.1%, in Russia 2.4%, and in the UK 2.7%, in the US 2.9%. So you can see actually that there is more growth now coming from the developed market. This is something in a way quite new. Will it last? We don't think so. At some point, emerging markets will be a good opportunity again, but for the coming months, we are underweight emerging markets and we favor the US, very positive on the US economy and the US market. We don't think the US market is expensive. We know that corporate margins are high, but we think that it is sustainable and they will continue to be high. In Europe, we are positive, especially on Germany. The German economy is actually enjoying very low interest rates. As you know, the central bank has pushed interest rates almost to zero, although they are actually benefiting from a very, very strong economy that could justify interest rates up to 4% if you use the Taylor rule. So here again, very positive on Germany. Talking about Japan that you mentioned, we think the Abe policy will succeed and we see the yen continue to weaken. So we think it will be, and we continue to be very positive for Japanese equities.
So in this German powerhouse of Europe, which you talked about, which kind of companies would you particularly favor there?
Yeah, we like companies such as Volkswagen, for example. We like companies such as TUI. This is the travel business. I would say that we like companies exposed to the German and to the European economy, because European economy this year in 2014 will expand. It will grow. Our expectation is 0.7%. Last year, keep in mind that we had a recession in Europe and the growth was minus 0.4%. So there is a pickup there in Europe and Germany will benefit from it. The European economies, especially so on the Eurozone, will not suffer such a big fiscal drag that we had last year, and this is very positive.
In this recovery in particular, financial stocks are perhaps seen as the final frontier, as we saw how close some banks came to being totally destroyed back in 2008 and 2009. Is it time for the wealthy investor now to pile back into banking stocks? After all, many institutions are there already.
As you say, people have started to invest in banks over the last quarters already. So we had some very good performances in our banks investments. We still think it is an opportunity. You can see some big banks and especially European banks, which are actually priced under book value, 0.6, 0.7, and which are actually safer than they have ever been. So they worked a lot to fill all their regulation requirements. They've changed their business plan and they have focused more on their core business. So they manage very well. And we think some investors have actually remained on the sideline because of the crisis and because maybe at some point they have decided not to invest in bank anymore. But now the situation has changed and we really think that people should invest, and we are actually overweight on the banking sector.
Which other sectors do you favor, Eric, in addition to the financials?
We think there's still some value on the oil sector, actually, especially integrated oil companies. We don't have such a positive view on oil. We think the Brent will stay at around 110. Having said that, you have some companies such as Total, which has a price-earning ratio of 9 times, and which is paying 5% of dividend. So this is a unique opportunity to get some exposure to very solid companies and benefit from a very good yield.
So would you say that that energy sector has been depressed for some time and now is time for resurgence?
Completely. It has completely underperformed. No one has been looking at this sector for months. We have seen a very strong market, and the liquidity premium that the market has enjoyed has especially been positive for maybe more cyclical companies and what we call a beta high company, and the oil sector didn't enjoy that. So definitely we think there might be a pickup at some point. Of course, we need to keep in mind that there is the shale revolution happening. It's happening in the US, and it will happen maybe in the UK now, as we know. This is something very important, and when you invest in an integrated oil company, you want to be sure that this company is also part of this business, as it will create, in a way, a revolution in terms of energy. Yeah.